In this video, I'm going to quickly go over how to read profit and loss. Now, profit and loss is something that records how you went over a period of time, typically a year, so a 12-month period. It records all the revenue that was earned and all of the expenses that were paid out. Okay, that's in contrast to a balance sheet, which you might have also heard of. Balance sheet is a snapshot of what you earn at any given point in time. So it lists your assets and it lists your liabilities and what your net position is. I won't go through that one today. I just want to go through the profit and loss and explain how that one works and how to read one. So here's one that I've just taken from the internet. You can see that it's got total revenue here, which is the total money that's come in, that's been earned from sales. It's got a line for cost of goods sold, and it's got a line for gross profits, and it also lists a series of expenses over here. So what you'll be looking at here typically is that particular breakdown of revenue and expenses. And the difference here, you'll see that there's cost of goods sold, and you'll also see there's expenses. The difference is that cost of goods sold is more direct expenses. So if you were selling computers, it would be the cost of making a computer or buying the computer that you're selling. If you sold keyboards, it would be the cost of buying the keyboard that you're on selling. If you sell burgers, it'd be the cost of all the food that you buy in order to put it together to make the burger. So it's like the direct cost and the direct profit from the product, but it doesn't take into account other expenses that could be overheads or general other operating costs. So in this example, there's $1 million of revenue here. Now, all of the figures in a profit and loss don't have GST in them. They tend to always be net of GST. So you've got total revenue, you've got your cost of goods sold, it gives you a gross profit. The gross profit is just that minus that, okay? And then when you take the gross profit, you know how much you made, just from selling items on its own. And then you have your other expenses here. Now, when you read your other expenses, you've got to read them carefully because not all of them have cash flow impact. Okay, so sometimes you can have something that shows a great profit, but you don't really feel like you're making that kind of profit. And that might have happened to you. You look at something and say, I don't really feel like I went that well. And that's because there's a difference between cash flow and profits. So in this example here, you can see they've got depreciation here. Now depreciation, you don't pay anything for the depreciation, but you might have bought something a while back. So depreciation is typically where you bought something that lasts for a long time. It might last for 5 years or something. And so you claim the expense over 5 years instead of one go. So you might have bought something and feel like you don't have much money left over because you've only been able to claim some of it in depreciation. Another one is wages and salaries. This one doesn't seem to have superannuation, so you'd probably have to add that. But it also doesn't reflect the employee entitlements. So you accrue annual leave, and then you need to pay that annual leave out, I suppose, when an employee takes a holiday. And there are other entitlements too. And so while this might reflect the money that you make while the employee is working, you're going to make less money while they're not working. So if you want a sort of a true margin of how you're going, you probably need to just work out what the entitlement inclusive cost might be, which would be, you can multiply it by 1.25 for permanent employees. When you do that, it looks like you're actually not making a profit, you're actually making a loss. But you've got to take into account depreciation. But if you, in that particular year, bought the item which you're depreciating, you could easily feel like you actually made a really big loss that year instead of actually making a profit. So with these figures, you just, got to check, because of the nature of accounting, you got to kind of check, and you can sort of read into the figures and you can get a lot of data. Similar in this situation, if I just put that back again, and I'll do a different video on this to explain GST, but if I were looking at this particular business with the net profit down here, I'd say that they probably are still in a GST payable position, and that's just because of the way GST works, and I can go through that another time. So hopefully that's been helpful. If you have any questions, just feel free to reach out. Thank you very much.